Welcome back. Today, cost and variance measure questions will be covered in 2 episodes. At the end of the video, there is question number 31, which is up to you to solve, and write the solution in the comment to review with you on studying and solving the questions. The question will be solved in the next episode. The channel is now working on covering the questions of the year 2023. Follow the channel to receive all the questions from multiple sources.
Question 1. All of the following statements concerning standard costs are correct except A. Time and motion studies are often used to determine standard costs. B. Standard costs are usually set for 1 year. C. Standard costs are usually stated in total, while budgeted costs are usually stated on a per unit basis. D. Standard costs can be used in costing inventory accounts.
The answer is C. Standard costs are usually stated in total, while budgeted costs are usually stated on a per unit basis. In a standard costing system, time and motion studies are often used to determine standard costs, are usually set for 1 year, and can be used in costing inventory accounts. Standard costs are never stated in total, but rather on a per unit basis, where the budgeted costs are states in total.
Question 2. If 0.7 manufacturing labor hours of input are allowed for producing 1 output unit and labor hours cost $27, then the standard cost of labor would be A. $18.90 per output unit. B. $8.10 per output unit. C. $35.10 per output unit. D. $45.90 per output unit.
The answer is A. $18.90 per output unit. Direct cost items such as direct materials and direct labor are measured by determining the number of units of each type of input required to get 1 unit of output. This amount, 0.7, is multiplied by the standard cost per input unit, $27, thus 0.7 labor hours per unit times $27 labor cost per hour equals $18.90 labor cost per unit.
Question 3. What is the correct interpretation of a favorable materials yield variance? A. Fewer of each type of material were used than were allowed to be used for actual production. B. Fewer total units of materials were used than were allowed to be used for actual production. C. Actual material prices were lower than standard material prices. D. The cost of the actual mix of labor, based on standard wage rates, was lower than the cost of the standard mix of labor, based on standard wage rates.
The answer is B. Fewer total units of materials were used than were allowed to be used for actual production. If 2 or more types of material or labor are used, the total quantity, or efficiency, variance can be broken down into mix and yield variances. The materials yield variance arises when the total units of materials used differs from the total units allowed to be used for actual production. If the total units used is less than the total units allowed to be used, the materials yield variance is favorable, as this indicates that less is spent on materials than expected.
Question 4. Chair Company, CC, has provided the following standard cost sheet. Note that the input quantity multiplied by the cost per input equals cost per chair. Also note in this case that manufacturing overhead, MOH, costs are being allocated on the basis of total direct labor hours, DLH. CC also disclosed the following actual information. 5,000 pounds of plastic was purchased for $63,750, of which 4,600 was used in production. Molders were paid a total of $10,500 to work 575 hours, and finishers were paid a total of $29,000 to work 1,050 hours. 1,100 plastic chairs were produced and sold during the year. What is the direct labor rate variance based on the above information? A. $1,750 unfavorable. B. $1,750 favorable. C. $750 unfavorable. D. $750 favorable.
The answer is A. $1,750 unfavorable. The direct labor rate variance formula can be calculated using either the framework approach or the formula approach. Below is the framework approach. Note that we can compute the actual rate paid per hour for molders as $18.26 per hour, $10,500 divided by 575 hours. Additionally, we can compute the actual rate paid per hour for finishers as $27.62 per hour, $29,000 divided by 1,050 hours. Since the left side of the framework, which is based on actual labor rates, is larger than the right side, this variance is unfavorable. Below is the formula approach. Note that the molder's actual labor rate is lower than standard, $18.26 versus $20, respectively, which indicates a favorable F rate variance. The finisher's actual labor rate is higher than standard, $27.62 versus $25, respectively, which indicates an unfavorable U. Direct labor rate $1,750 unfavorable. Correct $1,750 favorable. Your answer variance. When calculating this variance, use the unrounded actual labor rate amounts. In this rationale, 5 decimal places are used for the actual labor rates. Direct labor rate variance equals actual quantity times standard rate minus actual rate. Molders, 575 hours times $20 minus $18.26087 equals $1,000 F. Finishers, 1,050 hours times $25 minus $27.61905 equals $2,750 U. Total labor rate variance, $1,000 F plus $2,750 U equals $1,750 U. Note that the computational solution for finishers is a negative value, but the result is reported as an absolute value. Variances are not reported as negative or positive values, but as unfavorable U or favorable F values. Molders is favorable and finishers is unfavorable as we determined before the calculation.
Question 5. Newport Bottling Company made 500,000 bottles of soda. The company used 400,000 pounds of direct materials that cost them $250,000. The standard quantity of materials is 0.75 pounds per unit and 65 cents per pound. The materials price variance is A. $10,000 favorable, B. $10,000 unfavorable, C. $16,250 unfavorable, D. $16,250 favorable.
The answer is A. $10,000 favorable. The direct materials price variance measures the difference between the actual amount paid for direct materials and the amount that should have been paid for the actual amount of materials purchased. Newport should have paid $260,000 for 400,000 pounds of materials, 400,000 pounds times 65 cents per pound. Since the actual amount paid, $250,000, is $10,000 lower than the amount that should have been paid, the variance is favorable.
Question 6. Which of the following results from substituting one direct material for another? A. Efficiency variance. B. Yield variance. C. Sales mix variance. D. Mix variance.
The answer is D. Mix variance. When a product has 2 or more ingredients that can be substituted for one another, the product can have a mix variance or a variance in the usage of the substitutable materials.
Question 7. A paint manufacturing plant has 2 white pigments that are substitutable for the same product. Natural pigment costs $3 per gallon, and artificial pigment costs $1 per gallon. Standards call for 60% natural and 40% synthetic, but the actual ratio used was 50% of each. The actual total quantity of both ingredients was 30,000 gallons while the budgeted total quantity was 32,000 gallons. What is the mix variance for these ingredients? A. $6,000 favorable. B. $10,400 favorable. C. $10,400 unfavorable. D. $6,000 unfavorable.
The answer is A. $6,000 favorable. The mix variance is calculated in 5 steps. 1. Multiply the budgeted cost per unit times the actual total quantity times the actual mix ratio for each item. Natural equals $3 per gallon times 30,000 gallons times 0.5 equals $45,000. Artificial equals $1 per gallon times 30,000 gallons times 0.5 equals $15,000. 2. Add these two amounts, $45,000 plus $15,000 equals $60,000. 3. Multiply the budgeted cost/unit times the actual total quantity used times the budgeted mix ratio for each item. Natural equals $3 per gallon times 30,000 gallons times 0.6 equals $54,000. Artificial equals $1 per gallon times 30,000 gallons times 0.4 equals $12,000. 4. Add these two amounts, $54,000 plus $12,000 equals $66,000. 5. The first sum less the second sum equals the mix variance, $60,000 minus $66,000 equals $6,000 favorable.
Question 8. A company's master budget indicated that 50,000 units of finished goods should be produced using 25,000 feet of materials at $4 per foot. The company actually produced 48,000 units of finished goods, purchased 27,000 feet of materials at $4.25 per foot, and used 25,000 feet of materials in production. The direct material efficiency variance is $8.0. B. $4,000 unfavorable. C. $6,000 unfavorable. D. $8,000 unfavorable.
The answer is B. $4,000 unfavorable. Material efficiency variance equals standard price times actual quantity of material used, standard quantity of material allowed for actual production volume. Material efficiency variance equals $4 times 25,000 minus 5 times 48,000. Material efficiency variance equals $4 times 1,000. Material efficiency variance equals $4,000 unfavorable. It is an unfavorable variance because more material was used than the standard quantity of material allowed for actual production. The standard quantity allowed was calculated by determining the budgeted quantity per unit, 25,000 feet divided by 50,000 units, equals 0.5.
Question 9. Juanetta received a report from the production and purchasing departments with the following values for April. Actual materials quantity, 14,000 pounds. Total actual cost, $18,450. Standard materials quantity, 2.7 pounds per unit. Standard price, $1.35 per pound. Units made, 5,200. 3 days later, she got a correction report from the purchasing department that they forgot to add shipping to the price of the materials. Shipping for April cost $585. How much would Juanetta's materials price variance change for the month of April? Do not round any calculations. A. $585 unfavorable. B. $585 favorable. C. $135 unfavorable. D. $135 favorable.
The answer is A. $585 unfavorable. Correct. The materials price variance measures the impact of the actual materials price being different from the standard materials price on material costs for a period. To calculate it, one multiplies the difference between the standard material price and the actual material price by the actual quantity of materials. The original actual materials price is $1.317857, rounded for display purposes, per pound, $18,450 divided by 14,000 pounds. Using this figure, the original materials price variance is $450 favorable, $1.35, $1.317857, times 14,000 pounds. The revised actual materials price is $1.359643, rounded for display purposes, per pound, $19,035 divided by 14,000. Using this figure, the revised materials price variance is $135 unfavorable, $1.35, $1.359643, times 14,000 pounds. This is a change of $585, $450 plus $135, and it is unfavorable since the actual material price increased.
Question 10. The VFG company uses two different materials to produce its product. In 20/8, VFG expected to produce 5,500 units, but it actually produced 5,000 units. Information about material usage is as follows. Based on this information, what is VFG's material mix variance for 20 by 8? A. $10,400 unfavorable. B. $26,400 unfavorable. C. $16,000 favorable. D. $32,000 favorable.
The answer is C. $16,000 favorable. If two or more types of material or labor are used, the total quantity, or efficiency, variance can be broken down into mix and yield variances. The mix variance arises when the individual components are used in a different mix than is called for by the standards. The first step is to calculate the cost of the standard mix of the components based on the standard costs of the components. The second step is to calculate the cost of the actual mix of the components based on the standard costs of the components. The actual costs are not used as the quantity variance is based on standard costs, not actual costs. The third step is to multiply the difference in the costs by the total amount of the inputs used. In this example, the cost of the standard mix is $13.20 per pound, 28,800 pounds times $10 plus 19,200 pounds times $18, divided by 48,000 pounds, and the cost of the actual mix is $12.88 per pound, 32,000 pounds times $10 plus 18,000 pounds times $18, divided by 50,000 pounds. Based on these figures, VFG's material mix variance is $16,000 favorable as the actual mix is less costly than the standard mix, $13.20 to $12.88, times 50,000 pounds. This mix variance is favorable, F, because VFG's actual mix of expensive material number 456, 36%, is lower than its standard mix percentage, 40%, relative to the mix percentage of cheaper material number 123. This shift in relative labor inputs has a favorable effect on operating profit. Before computing the variance, note that the actual material mix percentage for material number 123, 64%, is higher than the expected mix percentage, 60%, which is unfavorable. The actual material mix percentage for material number 456, 36%, is lower than the expected mix percentage, 40%, which is favorable. Because material number 456 has the higher standard price, the overall material mix variance will be favorable. Remember to use the precise mix percentages and not the rounded mix percentages when calculating this variance using the formula approach. Material mix variance equals total actual volume times expected mix minus actual mix times standard price. Material number 123, 50,000 times 60% to 64%. Times $10 equals $20,000 U. Material number 456, 50,000 times 40% to 36%, times $18 equals $36,000 F. Total material mix variance, $20,000 U plus $36,000 F equals $16,000 F. Note variances are not reported as negative or positive values, but as unfavorable, U, or favorable, F, values. Hence, even though the computation solutions for material number 123 is a negative value and material number 456 is a positive value, the respective variances are actually unfavorable and favorable, as we determined before computing the size of the variances.
Question 11. Which of the following statements is correct concerning a standard cost system? A. A standard cost system enables an organization to identify variances between actual and expected performance. B. A standard cost system uses price data but not quantity data. C. A standard cost system calculates cost information after actual costs are available. A standard cost system uses quantity data but not price data.
The answer is A. A standard cost system enables an organization to identify variances between actual and expected performance. A standard cost system uses estimates of the price to be paid for inputs, the quantity of each input to be used per unit of service, and the service level for a period to predict costs for that period. These predicted costs can be compared with actual costs to identify variances between actual and expected costs.
Question 12. Fox Run Company produces a product which requires 6 hours of direct labor at $25.60 per hour. During October, Fox Run's actual payroll was $314,496 and the company used 12,600 direct labor hours to produce 2,000 units of the product. What is Fox Run's direct labor price variance? A. $8,064, favorable. B. $8,064, unfavorable. C. $7,296, unfavorable. D. $15,360, unfavorable. A. $8,064, favorable. The direct labor price variance measures the difference between the actual amount paid for direct labor and the amount that should have been paid for the actual number of hours worked. Fox should have paid $322,560 for 12,600 direct labor hours, 12,600 hours times $25.60 per hour. Since the actual amount paid, $314,496, is $8,064 lower than the amount that should have been paid, the variance is favorable. Question 13. The LKO company uses two different types of labor to produce its product. In 20/8, LKO expected to produce 10,000 units, but it actually produced 10,800 units. Information about labor usage is as follows. Based on this information, what is LKO's labor yield variance for 20/8? A. $4,000 favorable. B. $21,000 favorable. C. $17,000 unfavorable. D. $32,000 unfavorable.
The answer is B. $21,000 favorable. If two or more types of material or labor are used, the total quantity, or efficiency, variance can be broken down into mix and yield variances. The yield variance arises when the total inputs used differs from the total inputs allowed to be used for actual production. The first step is to determine the total inputs used in production. The second step is to determine the total inputs allowed to be used for actual production. The third step is to calculate the cost of the standard mix of the components based on the standard costs of the components. The last step is to multiply the difference in the amounts by the cost of the standard mix of the components. In this example, 85,000 total hours were used to produce the 10,800 units, 51,000 of A and 34,000 of B, while a total of 86,400 hours, 54,000 of A and 32,400 of B, were allowed to be used to produce the 10,800 units. The cost of the standard mix is $15 per hour, 54,000 hours times $12 plus 32,400 hours times $20, divided by 86,400 hours. Based on these figures, LKO's labor yield variance is $21,000 favorable as fewer total hours were used than were allowed to be used, 86,400 minus 85,000, times $15 per hour based on the standard amount of 5 hours of Type A labor per unit and actual production and sales of 10,800 units, LKO should have used 54,000 Type A labor hours for its actual production, 5 hours times 10,800 units. Similarly, based on the standard amount of 3 hours of Type B labor per unit and actual production and sales of 10,800 units, LKO should have used 15,000 Type B labor hours for its actual production, 3 hours times 10,800 units. The direct labor yield variance is favorable, F, because LKO's total actual direct labor hours, 85,000 hours, is fewer than total standard hours allowed, 86,400 hours. This computation isolates the effect of the direct labor yield variance by holding constant each of the standard labor mix percentages in both boxes above. As mentioned above, the direct labor yield variance is favorable, F, because LKO's total actual direct labor hours, 85,000 hours, is fewer than total standard hours allowed, 86,400 hours. Direct labor yield variance equals total standard quantity allowed minus total actual quantity, times standard mix percent times standard rate. Type A, 86,400 hours, 85,000 hours, times 62.5% times $12 equals $10,500. F. Type B, 86,400 hours, 85,000 hours, times 37.5% times $20 equals $10,500. F. Total direct labor yield variance, $10, 500 F plus $10, 500 F equals $21,000 F.
Question 14. Brent received a report from the production and purchasing departments with the following values for August. Actual materials quantity, 6,200 pounds. Total actual cost, $9,250. Standard materials quantity, 1.25 pounds per unit. Standard price, $1.50 per pound. Units made, 4,800. 2 days later, Brent received a correction from the production department that they found a missing order for 200 units, which means they made 5,000 units in August. How much would Brent's materials quantity variance change for the month of August? A. $375 favorable. B. $375 unfavorable. C. $75 favorable. D. $75 unfavorable.
The answer is A. $375 favorable. Correct. The materials quantity variance measures the impact of the actual materials used being different from the standard materials allowed to be used on material costs for a period. To calculate it, one multiplies the difference between the standard materials allowed to be used and the actual materials used by the standard price of the materials. The original standard materials allowed is 6,000 pounds, 4,800 units times 1.25 pounds per unit. Using this figure, the original materials quantity variance is $300 unfavorable, 6,200 to 6,000 times $1.50 per pound. The revised standard materials allowed is 6,250 pounds, 5,000 units times 1.25 pounds per unit. Using this figure, the revised materials quantity variance is $75 favorable, 6,200 to 6,250 times $1.50 per pound. This is a change of $375, $300 plus $75, and it is favorable since more units were produced with the same amount of materials.
Question 15. Noah's boat supplies use 25,200 pounds of direct materials when the standard is 24,000 pounds. Noah paid $4.40 per pound when the standard is $4 per pound. What is Noah's direct materials quantity variance? A. $5,280, unfavorable. B. $4,800, unfavorable. C. $9,600, unfavorable. D. $10,080, unfavorable.
The answer is B. $4,800, unfavorable. The direct materials quantity variance measures the impact of the actual materials used being different from the standard materials allowed to be used on material costs for a period. It is calculated by multiplying the difference between the standard materials that should be used and the actual materials used by the standard price of the materials. Since Noah used 1,200 extra pounds and the standard price is $4 per pound, the direct materials quantity variance is $4,800, $4 times 1,200, unfavorable.
Question 16. Dura Corporation is developing standards for the next year. Currently XZ26, one of the material components, is being purchased for $36.45 per unit. It is expected that the component's cost will increase by approximately 10% next year, and the price could range from $38.75 to $44.18 per unit, depending on the quantity purchased. The appropriate standard for XZ26 for next year should be set at the A. Current actual cost plus the forecasted 10% price increase. B. Highest price in the anticipated range to ensure that there are only favorable purchase price variances. C. Price agreed upon by the purchasing manager and the appropriate level of company management. D. Lowest purchase price in the anticipated range to keep pressure on purchasing to always buy in the lowest price range.
The answer is C. Price agreed upon by the purchasing manager and the appropriate level of company management. Price agreed upon by the purchasing manager and the appropriate level of company management. When setting price standards, an agreement must take place between the purchasing manager and the appropriate level of company management. During this process, it needs to be assured that the price meeting corporate strategic and operating objectives.
Question 17. In the Hayden Company, the standard material cost for the silk used in making a dress is $27 based on 3 square feet of silk at a cost of $9 per square foot. The production of 1,000 dresses resulted in the use of 3,400 square feet of silk at a cost of $9.20 per square foot. The materials quantity variance is A. $600, unfavorable. B. $680, unfavorable. C. $3,680, unfavorable. D. $3,600, unfavorable.
The answer is D. $3,600, unfavorable. The materials quantity variance measures the impact of the actual materials used being different from the standard materials allowed to be used on material costs for a period. It is calculated by multiplying the difference between the standard materials that should be used and the actual materials used by the standard price of the materials. Hayden should have used 3,000 square feet of silk to produce 1,000 dresses, 1,000 dresses times 3 square feet per dress. It used 400 more square feet than allowed to produce these dresses. Based on the standard price of $9 per square foot, the materials quantity variance is $3,600, $9 times 400, unfavorable since more square feet than allowed were used.
Question 18. The following direct labor information pertains to the manufacturing of product GLU. Time required to make 1 unit 2 direct labor hours. Number of direct workers 50. Number of productive hours per week, per worker 40. Weekly wages per worker $500. Workers' benefits treated as direct labor costs 20% of wages. What is the standard direct labor cost per unit of glue? A. $30. B. $25. C. $15. D. $12.50.
The answer is A. $30. The standard direct labor cost per unit of GLU is calculated as follows.
Question 19. Chair Company, CC, has provided the following standard cost sheet. Note that the input quantity multiplied by the cost per input equals cost per chair. Also note in this case that manufacturing overhead, MOH, costs are being allocated on the basis of total direct labor hours, DLH. CC also disclosed the following actual information. 5,000 pounds of plastic was purchased for $63,750, of which 4,600 was used in production. Molders were paid a total of $10,500 to work 575 hours, and finishers were paid a total of $29,000 to work 1,050 hours. 1,100 plastic chairs were produced and sold during the year. What is the direct materials usage variance based on the above information? A. $3,750 unfavorable. B. $2,400 unfavorable. C. $2,400 favorable. D. $3,750 favorable.
The answer is B. $2,400 unfavorable. The direct materials usage variance formula can be calculated using either the framework approach or the formula approach. Below is the framework approach. Based on the standard quantity of 4 pounds of plastic per plastic chair and actual production and sales of 1,100 chairs, CC should have used 4,400 pounds of plastic for its actual production, 4 pounds times 1,100 chairs. Since the actual quantity reported, 4,600 pounds, is more than the standard quantity allowed, 4,400 pounds, the direct materials usage variance is unfavorable, U. Below is the formula approach. Direct materials usage variance equals standard quantity allowed minus actual quantity used, times standard price. Direct materials usage variance, 4,400 pounds minus 4,600 pounds, times $12 equals $2,400 U. Note that the computational solution for the direct materials usage variance is a negative value, but the result is reported as an absolute value. Variances are not reported as negative or positive values, but as unfavorable, U, or favorable, F, values. As mentioned, since the actual quantity reported is more than the standard quantity allowed, the direct materials usage variance is unfavorable, U.
Question 20. Whispering Pines Manufacturing produced 2,500 units and had a $21,000 unfavorable direct labor price variance. The company's standard rate of pay is $24 per hour and the actual number of direct labor hours worked was 10,500. If the standard direct labor hours per unit is 4 hours, what was the actual rate of pay for direct labor? A. $22 per direct labor hour. B. $26 per direct labor hour. C. $18 per direct labor hour. D. $24 per direct labor hour.
The answer is B. $26 per direct labor hour. The direct labor price variance measures the difference between the actual amount paid for direct labor and the amount that should have been paid for the actual number of hours worked. It is calculated by multiplying the actual hours worked by the difference between the actual labor price per hour and the standard labor price per hour. Rearranging the formula results in the actual labor price per hour being calculated as price variance divided by actual hours plus standard rate. Using Whispering's figures results in an actual labor price of $26 per hour, $21,000 divided by 10,500 plus $24.
Question 21. Elk Creek Company's most popular product requires specialized labor. These individuals are highly productive, but also highly paid. The following standards have been developed for the product. 3 direct labor hours unit. $45 per direct labor hour. During November, Elk Creek produced 3,600 units and used 7,000 direct labor hours. The company's direct labor cost was $378,000. For Elk Creek, what is the difference between the actual amount paid and the amount that should have been paid for the number of hours worked, and is the difference favorable or unfavorable? A. $63,000, unfavorable. B. $171,000, favorable. C. $108,000, favorable. D. $171,000, unfavorable.
A. $63,000, unfavorable. The direct labor price variance measures the difference between the actual amount paid for direct labor and the amount that should have been paid for the actual number of hours worked. Elk should have paid $315,000 for 7,000 direct labor hours, 7,000 hours times $45 per hour. Since the actual amount paid, $378,000, is $63,000 higher than the amount that should have been paid, the variance is unfavorable.
Question 22. Sanderson Manufacturing makes paintbrushes and other paint supplies. Their 3-inch paintbrush has a standard of 0.28 pounds of bristles, and 1 pound of bristles costs Sanderson $3.45 to purchase. In March, Sanderson made 12,000 3-inch paintbrushes and used 3,400 pounds of bristles. This cost the company $11,730. What was the difference in the number of pounds of bristles Sanderson should have used compared to the number of pounds they actually used? A. They used 40 pounds less than they should have. B. They used 40 pounds more than they should have. C. They used 138 pounds more than they should have. D. They used 138 pounds less than they should have. The answer is B. They used 40 pounds more than they should have. Correct. To produce 12,000 3-inch paintbrushes, Sanderson should have used 3,360 pounds of bristles based on the standard of 0.28 pounds of bristles per 3 paintbrush, 12,000 times 0.28. It actually used 3,400 pounds of bristles to produce 12,000 3-inch paintbrushes. This means Sanderson used 40 more pounds, 3,400 to 3,360, than it should have to produce the brushes. Question 23. A paint manufacturing plant has 2 white pigments that are substitutable for the same product. Natural pigment costs $3 per gallon, and artificial pigment costs $1 per gallon. Standards call for 60% natural and 40% synthetic, but the actual ratio used was 50% of each. The actual total quantity of both ingredients was 30,000 gallons while the budgeted total quantity was 32,000 gallons. What is the mix variance for these ingredients? A. $6,000 favorable. B. $6,400 favorable. C. $12,000 favorable. D. $6,000 unfavorable.
The answer is A. $6,000 favorable. The mix variance is calculated as the difference between the standard costs at the actual mix, sigma AQ times A% I times SP, and standard costs at the standard mix, sigma AQ times S% I times SP. The variance is favorable if costs at the actual mix are less than costs at the standard mix.
Question 24. Natalie received a report from the production and purchasing departments with the following values for October. Actual materials quantity, 18,000 pounds. Total actual cost, $8,700. Standard materials quantity, 1.05 pounds per unit. Standard price, 50 cents per pound. Units made, 16,000. 4 days later, Natalie received a correction from the production department that they found an error in their calculations, and they actually only used 17,800 pounds of raw materials. How much would Natalie's materials quantity variance change for the month of October? A. $100 unfavorable. B. $100 favorable. C. $500 favorable. D. $500 unfavorable.
The answer is B. $100 favorable. Correct. The materials quantity variance measures the impact of the actual materials used being different from the standard materials allowed to be used on material costs for a period. To calculate it, one multiplies the difference between the standard materials allowed to be used and the actual materials used by the standard price of the materials. The original standard materials allowed is 16,800 pounds, 16,000 units times 1.05 pounds per unit. Using this figure, the original materials quantity variance is $600 unfavorable, 18,000 to 16,800, times 50 cents per pound. Using the revised amount of materials actually used, the revised materials quantity variance is $500 unfavorable, 17,800 to 16,800, times 50 cents per pound. This is a change of $100 and it is favorable since fewer pounds were used to produce the same level of output.
Question 25. Gaza Toys made 4,000 teddy bears for the Christmas season. The company used 3,800 pounds of direct materials that cost Gaza $6,308. The standard quantity of materials is £1 per unit and $1.50 per pound. The materials price variance is A. $608, favorable. B. $608, unfavorable. C. $308, unfavorable. D. $300, favorable.
The answer is B. $608, unfavorable. The direct materials price variance measures the difference between the actual amount paid for direct materials and the amount that should have been paid for the actual amount of materials purchased. Garza should have paid $5,700 for 3,800 pounds of materials, 3,800 pounds times $1.50 per pound. Since the actual amount paid, $6,308, is $608 higher than the amount that should have been paid, the variance is unfavorable. X $608, favorable. This answer is incorrect. The direct materials price variance is $608. However, it is not favorable. X $308, unfavorable. This answer is incorrect. Based on the standard usage of £1 per unit and the standard price of $1.50 per pound, Garza should have paid $6,000 for direct materials to produce 4,000 units, 4,000 by 1 times $1.50. However, the $308 unfavorable variance is the flexible budget direct materials variance, not the direct materials price variance. X $300, favorable. This answer is incorrect. The direct materials quantity variance is $300 favorable, not the direct materials price variance.
Question 26. Ramblewood Incorporated produces a product which requires 6 hours of direct labor at $32 per hour. During February, Ramblewood's actual payroll was $393,120 and the company used 12,600 direct labor hours to produce 2,000 units of the product. What is Ramblewood's direct labor price variance? A. $10,080, unfavorable. B. $9,120, unfavorable. C. $19,200, unfavorable. D. $10,080, favorable.
The answer is D. $10,080, favorable. He direct labor price variance measures the difference between the actual amount paid for direct labor and the amount that should have been paid for the actual number of hours worked. Ramble should have paid $403,200 for 12,600 direct labor hours, 12,600 hours times $32 per hour. Since the actual amount paid, $393,120, is $10,080 lower than the amount that should have been paid, the variance is favorable.
Question 27. When there are multiple inputs of either labor or material, the efficiency variance for either labor or material can be subdivided into A. Yield variance and mix variance. B. Mix variance and price variance. C. Yield variance and price variance. D. Volume variance and mix variance.
A. Yield variance and mix variance. Yield variance and mix variance. When there are multiple inputs of either labor or material, the efficiency of usage is affected by the mix of the inputs, creating a mix component in the efficiency variance. The remainder of the efficiency variance is the yield component.
Question 28. If 0.6 manufacturing labor hours of input are allowed for producing one output unit and labor hours cost $15, then the standard cost of labor would be A. $9 per output unit. B. $15 per output unit. C. $90 per output unit. D. $6 per output unit. A. $9 per output unit. Direct cost items such as direct materials and direct labor are measured by determining the number of units of each type of input required to get 1 unit of output. This amount, 0.6, is multiplied by the standard cost per input unit, $15, thus 0.6 labor hours per unit times $15 labor cost per hour equals $9 labor cost per unit. Question 29. Woodridge Company's standard rate of pay is $24 per direct labor hour. The actual payroll for 4,000 direct labor hours was $94,080. The standard hours for the amount produced was 4,100 hours. What is Woodridge Company's direct labor quantity variance? A. $1,920, unfavorable. B. $2,400, favorable. C. $2,400, unfavorable. D. $1,920, favorable.
The answer is B. $2,400, favorable. The direct labor quantity variance measures the impact of the actual labor used being different from the standard labor allowed to be used on labor costs for a period. It is calculated by multiplying the difference between the standard labor that should be used and the actual labor used by the standard labor price. Since Woodridge used 100 fewer hours and the standard price is $24 per hour, the direct labor quantity variance is $2,400, $24 times 100, favorable.
Question 30. Richter Company has an unfavorable materials efficiency, usage, variance for a particular month. All of the following could be the cause of this variance except A. Inadequate training of the direct labor employees. B. Poor quality of the raw materials. C. Poor performance of the shipping employees. D. Poor design of the production process or product.
The answer is C. Poor performance of the shipping employees. A materials efficiency usage variance would be affected by a poor quality of raw materials, poor design of the product process or product, or lack of skilled direct labor. A materials efficiency variance would not be affected by those employees, or indirect labor, associated with the production and shipping of the end product.
Question for the next episode.
Question 31. The direct material, DM, price variance is $2,650 favorable and the DM usage variance is $3,000 unfavorable. The budgeted amount of DM for each unit of product is 2 lbs, to be purchased at the standard price of $10 per pound. 2,000 units were budgeted to be manufactured, but the actual output was 2,500 units. Assume material purchased equaled material used. What was the actual price paid to purchase DM? A. $10 per pound. B. $9.50 per pound. C. $10.50 per pound. D. $9.75 per pound. Choose the correct answer and write in the comment. The question will be solved in the next episode, and the reason for choosing the answer will be discussed.